Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 21st of November. All right, now the dollar is starting to drift lower. Okay, I was talking about it yesterday. That move is in place and should continue. Today, front and center, dollar CAD. Okay, we've got the Canadian inflation numbers, so it's got to be your major focus, and that's what I'll focus on in today's Daily Market Insight. Market conditions, well, they're pretty good, right? The US bond yield prices are up, yields are down, means a weaker US dollar across the board, and a risk-on profile, equities up, euro, sterling, Aussie, Kiwi up, right? And that synergy between the various markets gives me confidence to get into the market, right? What I need is the Canadian data to match up with that profile, and I'm more than likely going to jump in. So the US dollar is drifting, right, against most pairs. Dollar yen, as I was saying, there's no need for the BOJ to do too much because the market will start unwinding their dollar positions straight away. Dollar CAD, well, that's our main instrument today. But I've got to say, out of all of them, I mean, it's got support and resistance, but it's probably the least directional currency out of all the majors, right? Euro, sterling, Aussie, Kiwi, all heading up. Dollar Swiss, dollar index down. Dollar CAD, well, it's a question mark, right? So if we have a look at the equity markets, right, you're looking for confirmation that the markets are, sort of finished with the whole Fed rate hike. And it does. It looks like it, right? All the US equity markets moving topside. Bitcoin's bounced back a bit. And this is the problem for us. Oil, it's just bounced back above the resistance trend line, and it becomes like an uncertain where it goes from here, right? And that creates a little bit more of a cloud around trading dollar CAD itself, all right? That's our major issue. Now, let's just look at the Canadian CPI numbers. Now, there's a whole bunch, like the RBA. They give themselves a few backup numbers. But the core year-on-year number, 3.2%, previous 3.8%, and the month-on-month inflation, 0.1 versus minus 0.1 previously. If anything, this is almost Groundhog Day, very similar, expecting big pullbacks on the year-on-year, like the US inflation numbers. And we might see a potential move here. But just be aware, there's about 3 or 4 variables of CPI numbers here to keep an eye on, right? And that could cloud things somewhat. We already know the technical picture is a bit cloudy. So is this looking like an awesome opportunity? Maybe not, right? Is my sort of take on it straight away. What I would be looking for is significant variance on these numbers to get things moving, right? Okay, so let's just have a look at dollar CAD itself, right? And if I sort of widen out the chart a touch, looking at where dollar CAD is, it's sort of drifting sideways, right? The issue in the Middle East, creating problems with oil. We've got support and resistance, which in a normal situation, I'd be going great. We've got good entry levels. But the problem is oil, right? It's not really playing the game, and it's pulling dollar CAD out of its normal equilibrium with supply and demand. Right. And now if you look at the oil chart, it has been tracking down, right? So oil lower, CAD lower, dollar up, but the dollar's falling, right? So we've got a bit of a conundrum here. And this is the problem with, at the time of this release, we don't have good synergy technically between oil and dollar CAD and what the dollar's doing, right? There's so many different components. It's a real pain in the backside. So, you know what? I'll be taking it a bit easy and keeping a closer eye on the fundamentals, because realistically, it could go up or down from this point. Short term, that's what can happen on the CPI release. But when it comes to like the follow through move, right, where you're really going to make the cash, it comes down to what oil does. Okay, so keep a close eye on the numbers. If we get much weaker CPI numbers, like lower than 3.2%, means the CAD's finished, or the Bank of Canada's finished with hikes. And what we would see is a spike to the top side in dollar CAD, right? What you need to be doing at that point is keeping an eye on oil and make sure it's going up as well. And when I say going up, I mean falling, right? Because I have oil is inverted on this chart, right? If it starts to fall, right, which means oil is rallying, it's going to mess up the whole picture. Okay, so to me, oil is a big problem, and it sort of blows out the opportunity somewhat. Okay, there's a chance of some synergy between the CPI release and oil, but you just need to keep a close eye on the markets to know what's going on, right? If you're looking for a risk-on day, euro, sterling, Aussie, Kiwi up, the dollar down, right? That would support a strong CPI number, a risk-off day. So if the US equities turn down, US yields up, mean the dollar will rally and euro, sterling, Aussie, Kiwi will fall. Well, that's going to support a weaker CPI number, right? But once again, you've got to keep an eye on oil. It's a tricky situation. Look at the market dynamics. If the inflation number matches what's happening in the market, we may have a short-term trade, and then just make sure you keep an eye on oil, because that's the tricky one at this point. If you get the markets connecting, it makes things easier. All right, guys, good luck. All the best. Cheerio.